So investors oftentimes overlook Big Bear because it's not a headline play. And the reality is that the company, if they can continue to build their defense and analytics AI company, they're going to see a lot of momentum here into 2026. And so as we get out into the fourth quarter, hopefully you guys are having a good one here. We are seeing some movement in Big Bear AI. We're going to do a full analysis here today. We're going to start by breaking down the markets. We'll get into some analysis of the news, the fundamentals, the financials, and then we'll get into the margins for profit, what we're seeing for this company here, both short-term and long-term. So we don't have any short-term positions here going with Big Bear, although we do have some positions in our Schwab portfolio. Just to disclose, we got some long-term positions there. When it comes to the analysis today, if you have any ticker symbols that you'd like me to take a look at after this, more than happy to take a look. Feel free to drop them below. What's going on, Sandesh? Good to see you. Thanks for tuning in, guys. Thanks for almost 30K subscribers. We're on the road to 100,000 subscribers. That's crazy. Let's jump into it. So Big Bear AI, we've seen it jump over the last year. Around this time, it was just $1 a share. We saw them now steadily build up into this $7 price point. And there is some key levels where we've seen them get rejected around that $10 level back in February, selling back down to $3, and then recovering back up into this $8.50, $9 range. And they have a notorious support level here right around $6 a share, around $6.50. And that's where we saw them kind of bounce here after the recent run back up to $9 towards beginning of October. And so we saw them sell back down from $9.40 back down to this $6.50 price point. Okay, so what we're going to be watching here is this support level at $6.50, and we'll jump a little more into the technicals, what things look like as they're kind of holding this key support level right there around $7. So they just jumped up a little bit today to $7.40, somewhere in here, and then pulled back down to about $7 bucks a share. So when we're looking at the defense market with Big Bear, what's going on? Kevin, good to see you. Johnny, what's up, Johnny? So when we're looking at the defense market here, and you're looking at Big Bear, you're looking at a growth period from the Big Beautiful Bill. Okay, so the Big Beautiful Bill for most defense companies, you can see they're compared to Palantir. They sometimes are compared to SoundHound, but really where they're similar to is Palantir. They got a partnership with Palantir. We'll kind of talk about why that is. But when we're looking at the financial side of things, you see more investments into defense tech. So right now, in the short term, there's a lot of volatility in the market for specifically defense stocks. And so if we get an analysis, let's pull it up here, BBAI. I don't know if you guys are familiar, but when it comes to this government shutdown, essentially you got most Democrats looking to extend some of the Obamacare funding, and then the Republicans are saying no, because we got to rewrite something new because the healthcare wasn't working. And then you got a disagreement. You got the government shutdown. It's the longest government shutdown in second longest government shutdown in history right now. What's going on, Der Chiller? What's going on, Widden? Der Chiller says good morning from Germany. Wow, Germany, that's so cool. I would love to go there. And then Widden sold BBAI, bought Veritone 3 days ago. Got it. Okay, we could take a look. But when you look at the impacts, so we consider government shutdown data in the market, right? Because in the shorter term, you're looking at higher impact in the defense markets as opposed to almost every other market. Defense markets seeing more of an impact from the shutdown. So short-term volatility impact primarily in the greater market is low, but in defense markets, it's pretty high. And so overall markets return positive most of the time in the government shutdowns, except you got sectors of defense primarily looking negative during government shutdown. So that's a really key indicator, because most people, you might have seen that the average return in a government shutdown is between like 10 to 15% or something like that positive, which is kind of ironic, but that's actually true. And then you look at the defense market, though, primarily their average is negative. So in the short term, you do have some of that pressure. You can even see some of the projections here from the AI projecting negative about 5% on Big Bear over the next few days here. And this is an AI system that we have developed. And I use it every day. And essentially, that's the short term market impact. The long term market impact for defense looks very good. You got the big, beautiful bill, more spending from the US government. You got the defense contracts that are going to be most likely increased as a result of that. And then specifically for the market of BigBear.AI, they are in the market of the ports of entry and all of the uh, entries and exits out of the United States, the border patrol essentially, they have this facial recognition software that goes at a lot of major airports, right? So the VeriScan technology, which we've covered before, and the VeriScan technology has been deployed at Chicago, and now we're getting kind of into the news here. Denver, Dallas, JFK, Los Angeles, all of those, Port of Seattle, and many more, Vancouver, and they're preparing for what is the 2026 FIFA World Cup. They're preparing for the 2028 Olympics coming to America as well. And so you got some big events for their market. And then on top of that, as they're deploying their VeriScan technology, this VeriScan, and I think there's a lot of technologies they have. They have a little bit of drone tech here. They got a Pentagon contract with something there. They have a predictive intelligence for the ports, like in the ocean at the Panama Canal. But I think this specifically, the VeriScan tech, is where they're actually seeing the most momentum. That's why we cover it primarily. And then how the market looks, so kind of shifting back to the market just a little bit there. How many of you guys saw this .gov article? It was the TSA screening partnership. Just came out this past summer. And when it came out, what they're looking for from TSA is biometrics. They're looking for AI-driven threat detection. They're looking for facial scanning and predictive analytics. And this is a service for TSA where the market, if we see government open back up, this is exactly what the U.S. Department of Homeland Security is looking to do with them. Any other news on Big Bear? Well, we've seen that they've deployed more biometrics. You could see this article just came out earlier last week on their VeriScan deployments into what was Chicago O'Hare International Airport. Okay, any other major news for Big Bear? They got their third quarter results coming up on November 10th. So we'll be watching there. We've actually been moving to our other Airbnb here in Buenos Aires. That's where we're moving. So should be able to still cover that earnings call. Any other news? We saw more institutional buying in the stock this quarter. So you got more, this kind of getting into the financials now. Increased positions, 203 increased positions, decreased positions at 70. So you're seeing more increased positions, and big companies like BlackRock and Vanguard and State Street, your top holders, Citadel, buying into BBAI, and you see institutional ownership actually dropped down to 28%. I think at one point it was like 30 or 40% there. And let's see what else we got. BBAI, some people are looking at. Kevin says, what's your take on increasing shares from 500 million to 1 billion dilution, also keeping a lid on valuation along with the shutdown? Yeah, I mean, dilution isn't a red flag, but it is something to watch. Dilution is something that helps them raise capital, which now we can kind of get in the financials here. The biggest advantage that BigBear.AI has as a company, and this is almost every company's that you want to look at this, are the financials related to the balance sheet. So the balance sheet, they've raised their assets to around $600 million. So their cash and short-term investments are up 440%. So when you look for that growth up to that $600 million total assets, that's going to be all-time highs for them. Leading up to those levels, the highest they had in assets was around 383, and even in 2024 they had 343, but still 347 million in liabilities. But now they got their liabilities down to 330, and then now 600 million in assets. And so you see their assets surge, their liabilities did not jump nearly as much. And so that's what looks good on the financials. Now, when we're looking at the market cap, $3 billion, we've seen them as high as I think around 5 billion at their peak. Okay. But we see them pull back down and they're at this $6.50 support right now. That level is very key to watch because in the past, right around earnings, especially, we had them hovering around this support last time, and then they weren't able to hold it. They dropped to 467 when the earnings came out. Okay, so BigBear.AI dropped. Last time they dropped, they were trying to hold this 650 level. Now they're holding the 650 level much better this time. You see them now up into this range, and institutional buying did increase, and we saw them, even push back up into this $6 range now, and now they're at 710. And what you don't want to see is them drop back into that valley. But if you're looking at a slow market cap build, okay, you're looking at this slow market cap build, and it's like you don't want them to go straight up. I mean, it's possible we see them kind of straight up out of here into that $9, $10 range, and they really start to price in for the future. People are anticipating the World Cup. They're saying, oh, look at all that infrastructure with the very scam. We're going to see more financials. That's possible in this instance of continuing, and that's a more hyper bullish trend, as that's kind of something like this, more or less. Okay, so you're looking at a trend that kind of looks something like this. But right now, where we've kind of played it, and I'm a long-term holder, so I'm very prone to being able to weather these types of things, and I do weather these types of things. The 200-day moving average is back down around 560. So you wouldn't want to see them break that level again. It would not be pretty. They would drop around 10 to 25% down into that $5.50 range. And it's not what you really want to see. So the government shutdown is a catalyst. We can kind of look, but when was the government shutdown announced? When was it announced? Let's see. I'll pull up the data straight from Mercatus here. Government shutdown. So government shutdown last announced, how long has it been since we've seen it? 10/1. So it's been 26 days. 10/1 was when the government shut down. So on 10/1, they were valued at about $7 a share. They haven't moved. They did see a little bit of a spike there. They continued up. But right here on 10/1, they were at $7 a share. They're still at $7 a share, and they're just trying to hold this momentum despite less contracts from the government and everything else. The reason why they could still grow during this time, and I see Michael Anthony looking at DJT news from Friday afternoon, has shares going higher. They're buying Bitcoin. Got it. Okay. I had Bratwurst from Germany not long ago. Texas here. Oh man, Jonathan, that sounds really good, man. A Bratwurst from Germany. You're getting me, man. I'm hungry right now, actually. Oh man, Gary, what's going on, Gary? Yeah, Jonathan, we're gonna have to go to Texas at some point, dude. Have some bratwurst. That sounds great. I haven't actually been to Austin, but I've always wanted to go. I don't know if that's where you're at, but would like to go around that area at some point. So anyway, when we're looking at the government shutdown, they've just held this level and haven't pushed up really, or they have pushed up to 940, but they've just held the same level. So this is actually a problem because what they got is the government shutdown sustained. And if that's the case, most companies would be in a really bad spot, okay? Government shutdown, live updates, missed paychecks. You see that happen here. How long is going to go? We don't even know at this point. Okay. It's day 27 and the Senate is voting right now. And the last shutdown that was this long was 50 years ago. Primarily, maybe not from the media perspective, but from kind of just a general consensus perspective, the Democrats really want to hold on to the Obamacare funding and things like that. And they want more funding. And then basically the Republicans are like, no, like it's not working, that healthcare, we got to restructure it or something. And uh, Democrats are kind of like the reason this thing is shut down is because they don't want to go forward. They want to keep adding and pulling money into the Obamacare, and the Republicans are like, where's it going? So anyway, that's what's going on with that. But then you got the problem here in is not actually maybe as big for Big Bear. You're not going to see government shutdowns historically impact negative on defense. But when you look at the defense dynamics, it's a little bit different in today's world. 100% of contracts for a defense company over the history of America is going to be usually only through defense with the government, right? Primarily. But when it comes to like Big Bear, they're partnering specifically with airlines. Okay, so they're partnering with like Delta. I think I saw them with what was the other one that they partnered with? Frontier. I think maybe it was United as well. Soft Point is another partner. And they're partnering specifically like with airports, maybe even on a state level or not on a federal level sometimes for some of their partnerships. And they also are partnering, their partnerships are not all related to the contracts that must come from the U.S. government. So they might be okay. They might be able to. One of the recent deals they got was with like the Washington Commanders, the football team, professional football team, something related to their stadium. And I thought, they could go continue in those industries during this time. And I don't know how long the government's going to be shut down, but it seems like that would create somewhat of a moat and would show them more resilient around this time. So I'm going to be, again, kind of holding our positions. We got through the technicals, fundamentals. That's how it looks. What do the technicals for the profit look like right now? Well, you got that support level here around $6.50, and $7 here is a key support. See that level of support right here? We saw them bounce down there today at market open. Okay, they sold back down. And right now they're holding above that $7 price point. Okay, so conservatively, they hold above this $7 price point. If you're looking more conservative in a sell down, bigger impact on government, we're looking at down to that 650. That's a 10% drawdown. Wouldn't really want to see it, but long term, it doesn't really matter. Short term, what are we looking for a potential trade into this week? If I was looking at a trade here, I'd probably have a set stop loss just under that $7 price point. And we would look for something up into this level of around $8.50. Okay, so this would be the next kind of level, or $7.85 to $8 a share. Okay, so around a 10% margin for profit. Now this level is key because this is a previous resistance that they have faced quite a few times. So you got that resistance level around 780. You're looking for something like this. Now, why would they continue up even in a government shutdown? Again, probably looking at infrastructure, saying all this very scanned deployments they've haven't had contract values. They're building the infrastructure, and they're going to, government opens back up. They could be positioning very well right now for some contracts, and that would put them in a position to get those contracts. Slightly more speculative, slightly more guessing, but primarily what we know is true is there's going to be more influx of people coming in for the World Cup in the US and for the Olympics just 2 years later. So really in the next year, they got that going on for the World Cup. They're going to want monitoring all that data. They're going to know who's coming in and out of the US. And that's kind of what the Big Bear technology does. So that would kind of indicate kind of that medium term, probably looking fairly bullish, but in the short term, they got that pressure right now. So again, bullish sentiment would be up to that 10% margin for profit, up to about $7.85 into $8 a share, or even higher, up into that $9 range, of 30% range for profit. Okay, so those are kind of the levels. I would watch that $7 support level in the immediate vicinity. And then when it comes to the focus opportunities this week, we're definitely going to be watching in the BigBear.AI markets, but you got other defense companies that didn't hold quite as well today, while BigBear held okay. And so we'll see kind of how that plays out. You got AMTM momentum was down 0.5%, and BigBear still kind of held that $7 price point. So same thing with Redwire. You see Redwire doing well. We'll hold and be watching them. So long term, I'm going to keep holding those positions. Okay, what else do we got going? All right, so we got Michael, Jonathan, got 540 shares of Data Vault at $2. They've had a lot of news recently. If I'm not mistaken, so Data Vault is related to, let's see, DVLT. All right. The only problem, I think, let's see. No, Data Vault was okay. They had total assets looking good. And they're at 612 million. Yeah, not so bad. Okay. Yeah, interesting. Yeah, we'll keep following them for sure. What else do we got? You got Kevin says, I took a small position in ASST today. Do you mean ASTS? Might be interesting to get your thoughts on it as it pumped some more. Do you mean ASTS? Do you mean ASST? ASST. Okay. Yeah, I'm not sure about this one. ASST stock. Let's see, Kevin. $1 billion market cap. Not really any revenue at all. Balance sheet. And negative net income for the most part. They're losing about $430 million on their profit margins. Is that right? Oh no, that's their profit margin percentage. They're losing annually about 20 million. Total assets are fairly up, but they've seen a rise in liabilities. What was the reason for this one? Asset entities. Social media marketing, content, professional services across Discord, TikTok, and other platforms. Oh. All right. Yeah, I mean, they're pretty consistent. I know they work, but I would be slightly hesitant. So I think this was a company that has a bunch of businesses related to. I actually knew this business back in 2018 when I first started StockMe, and then stopped doing it for like 5 years and worked at an institution and came back and started up StockMate again. And then they went public with, they basically have Instagram pages. So in the past, you might not know this, but my wife was like a professional singer, and I got to see the insides and outs of Instagram. Imagine there's a company that says, we own a bunch of YouTube channels and you can, own into our company. Okay. They kind of are like that. And they're also like, and we are selling things like tools for people to monetize or to invest or to trade or to learn how to invest. Okay. So then they have that. Okay. Now they have their brands here. Okay. Now, one thing to note is, like, I bring up my wife because she had around 200,000 followers, okay, on Instagram. And I also have a friend who has around like 1.5 million, another friend that has like 2 million. They don't make any money really. Like on the best month in 3 years, they probably make $1,000 or maybe $1,500 from Instagram. Monetization on Instagram is not very good, okay? So that's one thing. Then you look at the actual sales, and if you wanted to pull up ASST, you could see, despite having a public stock, you might want to look at what's going on with the insiders, right? So if you look at holders, okay, let's say you want to pull it up, let's say ASST, Strive common stock, okay, and you wanted to look at, let's say, the insider activity, okay. Insider activity. 10% beneficial owner, number of shares bought, number of shares sold, total shares traded, number of sales 18. Okay, market open buys 18. So you do see some let's see, some sells here from the company. They're selling quite a bit. Okay, they're selling, and this is the last month. There's 1,000 shares there, or 1,000,000 shares there, another 2,000,000 shares there, another 2,000,000 shares there. And they're selling a very large amount of their shares. Okay, now considering that, and then looking at the growth of the company, they have a negative balance sheet. So they're losing 20 million a year, and they're only making about $3 million a year. Very, very small amount. Okay, very, very small amount. And their assets were at 28 million. They're declining assets quarter over quarter. So personally, I wouldn't touch it. I think it's very high risk. Yeah, I just see it declining assets, rising liabilities. So you can see that orange there is the liabilities, increasing liabilities while the assets are dropping. Liabilities are up 3,000% year over year, and total assets are up just 800%. So you see them having some trouble there. And so cash flows, you see a little bit of net in cash there, but cash from operations down 13%, cash on financing down 85%. So essentially, like, financials look very poor. You can see increasingly negative net income on the company. So I would be very skeptical of this one, Kevin. Looks like in the past, I mean, I could kind of pull it up here. If you pull it up, you could see they've had pump and dumps. See this? Pump, dump. Big pop up to $19, selling off. You know, these are pump and dumps. Looks like they're going at it again. They're looking to pump and dump it. Again, I wouldn't touch it. We don't invest in anything that doesn't have integrity on that front. So that would be kind of my advice there on that stock. So hopefully that's helpful. Okay, and what else do we got, Jonathan? I'm outside of Dallas. Austin is cool, I guess. They have auction there with all law enforcement vehicles and drug dealers at cars every year. Oh, that's pretty cool. That's pretty cool. Whitten says there are 5,000 public airports in the USA. Not sure how much revenue can come from that. Yeah, it's a really large market. The addressable market for Big Bear is huge, right? With their approach, they're already in major airports first. Probably the best move is to go with the big airports first and then work their way back to kind of shorter or smaller airports. That's kind of what we see with them right now. You can kind of see the drawings there, but ultimately you see them start to kind of continue this trend here. Okay, what else do we got? Stars Alliance says, dude, you need to educate yourself on the healthcare issues. If Dems fold, even majority Taylor Greene is saying her kids' healthcare insurance will increase exorbitantly for the majority of people. I mean, there is, people that, if you look at the healthcare, I don't know if you've found that it works. And I'm not here to debate. I'm just here to basically say what's going on, right? Basically, whether or not you believe the healthcare in the United States works and it's good and it keeps people from having big medical bills and health in check, or you don't believe that, the reality is that primarily the reason for the government shutdown is the withholding or the refusal from the Democrats to let go of that funding. And so basically the funding was that they already got funding and there were some contingencies around the funding. I think it was a couple years ago, maybe during the Biden administration or something like that, where they got funding initially. And then there were some contingencies around the goals that they had for that funding and how it was supposed to reduce and some other things. And then basically, those goals or the purpose of all the hundreds of millions of dollars, I think it might have been billions of dollars towards the Obamacare, were assessed in this last, year. And they've kind of been putting off this government shutdown for a while, but ultimately they found that the goals that were set for the purpose of the last massive incentive for government funding for all the healthcare in the U.S. Didn't actually meet the goals that they set out, and that people are still struggling with healthcare. And so that is what the Republicans essentially said, and the assessment of what the initial goals were to what actually came out with. And so it's not necessarily that they're wrong, or that Democrats in general are in a bad spot, or that Republicans are all right. It's nothing like that. It's just, I'm telling you, like, that's kind of the reasoning for what is going on with government shutdown. As far as the solution right now has been a standoff, and it is the reason for the government shutdown, as they're voting right now in the Senate. So we'll see how it goes. But yeah, I mean, I'm not here to say anybody's like they're right, they're wrong, or anything like that. And so all I'm saying is, like, I understand that there's someone that says their kids' healthcare insurance will increase. Healthcare insurance is it needs a complete restructuring. I don't know if you would agree, but I mean, in my eyes, based on using healthcare insurance in the past, I've had things like different surgeries. I grew up in the 2000s, 2010s. I was born in 1999. I'm 25 years old. And so I grew up with a ton of asthma. I had injuries, things like that from sports. I used to play football and basketball and soccer. I would go to the hospital sometimes like that. My brother had what they called Lyme disease at the time. He was always in and out of the hospital. My mom had back surgery at one point. I've just seen the I've seen the healthcare system primarily in California and stuff, and across the US. And the only part of the healthcare system that I've found to be reliably good is if you're in a county that has it dialed in, and they figured it out down to a county level, or down to a city where they have those urgent cares, or those setups that are very on track. But for the most part, I've seen my whole family when I was growing up, they went through 2008 and there was all that stuff, right? But my family never, we were pretty poor when I was growing up, and that healthcare stuff never worked. It never worked. And that's just speaking from my own experience. It's all I can speak from. You can ask other people about what they think about the American healthcare system, but I think there's a massive restructuring that's needed regardless. And I don't believe that we're going to get there overnight either. So government shutdown might be what we need to come up with. I would imagine there's going to have to be a really good solution if they don't do the spending. And so that's kind of what they're maybe proposing as well, a different solution. And maybe we need to look at that and see what that actually looks like, and fully understand it. I think that is at least the standoff for now. Okay, what else do we got? We got Johnny. What's going on, Johnny? Thoughts on Redwire long term would be awesome. Yeah, so Redwire is, in my experience, Redwire has been a really good long-term play, and based on the growth of the markets in space tech, it's one of the first times ever where we've seen the space tech market have positive revenues. And so you've seen a lot of revenue actually coming in with space tech. This is the first time we see, a consistent $50 to $60 million a quarter on Redwire. And they've really ramped up. If you just kind of look back from 2020, they were doing 44 million that year. And you just kind of look, 137, they get up to 160, up to 240, up to 300 million. Now they're getting up into very high growth. $300 million a year for a space tech company is significant. And they're very disciplined with their total assets. So long term, they are still well below fair value, this Redwire company. And I would expect the space tech market to do well. But the defense market in the short term doesn't look good. That long term, if you're looking at, Redwire kind of taking a step back, they've kind of sold down and had some really strong moves this year. We saw them build market cap as high as $26, sell all the way down with the market corrections earlier this year into April before recovering. They sold down from $26 a share all the way down to $6 a share. Now, we started covering them after they sold down from here, and we were following them, and we got to invest in them. We were trading them up into these levels, see them sell back down. The nearest support level that they're at right now is going to be kind of like this gradual increase. Okay, they got some left to right happening currently. Kind of see that left to right here after that sell off. And they have a support level here around $8 a share. For Redwire, I would look for them to make this recovery. They have some big contracts they've recently signed, some independently in a couple dozen million, but also some group contracts that they're a part of that are in the billions of dollars. And so current assets are greater than their market cap. That's always a good indicator. And so next kind of target bullish, I would say, is up to this $10 price point. That's a 20% increase. A medium term, I would look for an $11 price point. It's a 40% increase. Of course, we'd love to see them get back up into that $13 a share, 60% or more, maybe even back up into levels we saw earlier this year. That's over 100% return. So they're beat down. They've been red. They're down to this support. And most people are not watching them right now. They're simply not watching them. And we're looking at them and we're saying, hey, they're at this support. If they drop further down below, let's say $7 a share, it's not looking good. They're really losing momentum, but it's looking good for investors that are going to buy long term. Financial management has been good. The problem that I'll see, I don't know how well they are as far as like their culture, their stewardship. I kind of got to meet some of their members at a conference, but I'm not super certain on the stewardship right now. Should probably get a better grasp of what's going on there. But we know that if you look at some of their solutions here, they are definitely getting contracts related to space tech, and they're seeing the revenue roll in and acquiring some smaller defense companies. I think they're in a good spot, Johnny, to be honest. Just kind of a beat down stock again, blood in the streets on that one. They're at around 750 right now. So, okay. Okay, so we got, what else? Michael, looks like no one cares about Redwire, needs profits, Michael says. Yeah, I mean, profits definitely are key, right? But you're also in a space tech industry, okay? I think Rocket Lab here still doesn't have a positive net income, okay? Let's see, do they? Let's see if we can get Rocket Lab pulled up here. We can get the Rocket Lab outlook here. Let's see. Yeah, Rocket Lab is still negative 66 million a quarter. They're losing $200 million a year, okay, or more. And so, most space tech companies aren't necessarily turning a profit. I think we could all agree, despite like a $250 billion valuation on SpaceX, they're not turning a profit. But it's the infrastructure, okay, and it's the revenues and the value that we see them build, and then at least maintaining enough consistent revenues to also at the same time raise and build their balance sheet and get their balance sheet and their assets up. And so that's why we look at them. They're losing money, yes. Are they still making some money? Yes, that's a contribution to the marketplace. And then are they raising money from the investor side? Yes, they are. And so that's kind of like, you see that across the space tech industry. It's one of the risks of investing in space tech. And it's a risk I always take on. It's like one of the probabilities that works against you in space tech are the profits. But overall, like at least the history of the last 5 years is that space tech stocks have been really great investments. And it doesn't necessarily reflect everything about the company. Specifically in space tech, you could say the same thing for probably robotic stocks as well, because the markets are so explosive and have also backing from many international agencies that you'd probably see as long as they have runway, if they got negative liabilities, they're going to be okay. Like if they have negative liabilities, they got more liabilities than assets, that's a problem. But other than that, they're going to be okay. That's kind of my approach to Space Tech. It seems to have worked. George says, Michael says, let's see, DJT has 2.3 billion in Bitcoin and other assets that has plenty more billions of cash. 2.3 billion going to grow. Bitcoin is going up. I would agree. I don't know if you guys know, but I hold about 50% of my net worth in Bitcoin. I haven't really shared that too much on the channel, but yeah. I don't know if that's helpful. The reason why is because of government printing, essentially. Yeah. Cool. So we got to go over, government moves. Hopefully it's helpful for you. We got to watch the government shutdown as that is impacting tech markets and the defense markets. We'll have another live session out later tonight, guys. Just want to get on here, get a quick breakdown on BigBear.AI. JZev was looking at Bitfarm. We were trading Bitfarm this morning, actually. I think we're still in a trade there. Let me see if it's... Was it Bitfarm this morning we were trading? BITF. Let's see. Hasn't moved too much. We bought this big dip. It dipped down from about 520 down to about 450. We jumped in at 460. It's at 450 right now. And we got we actually just entered this trade on BITF this morning in our daily live trading session. So we were watching, for this pullback here. We saw him pull back. We entered, still kind of holding. We're down just about 135 bucks, but we're looking for that profit margin to see them recover. I'd like to see something like this. See them continue up about 30%, which would be just around a $2,000 trade. So we're in that trade. So risk, a little bit more, risk tolerance in this one. The reason why we were watching Bitfarms was because of their data centers that they're building in North America. They have a lot of different data centers. The advent of AI has required a massive computational approach. And where are they going? Where are big tech going? They're going to the companies that have data centers that they can utilize. And this company is an energy company specializing in that. When you look at BITF, they have really increasing revenues. Negative net income still. Revenues up 87% this year, though, which is pretty good to see. And their balance sheet is increasing as well. They're up to almost $1 billion in assets right now. Total assets are up about 54% as they continue to grow. So $3.5 billion market cap. I think that they're going to continue up here. And if they don't, that's okay. We can manage risk accordingly as we normally do. But we entered that trade this morning in Stockmate. And pretty small position, hasn't moved that much, but we're gonna see how it goes into tomorrow, Tuesday, how the markets react. It was funny, right when we got in it this morning, we had like next 4 hours were like negative 3% on our machine analysis, and then it was like, well, the next day looks positive. And I was like, all right, so we got not such a good entry, I guess. It's going to sell down from entry, but maybe we can see a recovery tomorrow. And honestly, that's kind of exactly what we saw happen. We were selecting, this was on Claude analysis. You can do OpenAI or Grok. We use this machine almost every day. It allows us to visualize the markets. We have a watch list that we're building out here. And you could search with basically any AI model, and then we go and give the AI models the SEC data. We give it the charts, the financials. We tune up the models to be real time to get the projections for you. So this is kind of the projection. We're looking at a projection on Bitfarms of about 4.8% over the next day, and I like to see that. So fairly bullish over the next day. Again, I don't know if the 4 hour was just negative, and I was like, man, that's not so hot. I'd like to see the the next day turn green. So I entered it. It did continue down about 1 or 2%, but then we got the green over the next day, potentially according to our AI. So we like to, I mean, I've been using this almost religiously since we've developed it over the last 8 months, to get projections, or, if I need SEC filings or news or anything like that, I just drop it in. Government shutdown data, I drop it in. And the AIs do the analysis for me. And I really do want to stress, like, it's not perfect. It is AI analysis, but we go unbiased. And my theory is that all the AI models are just going to get better. And so we use Claude or Grok or OpenAI, and we're also doing some benchmark testing we've released, which have been really, really fascinating to see the impacts of different markets. And the different news that impacts the next day, it's going to be different news that impacts the next day versus the next year. And so we really take that to the next level. We really focus on the different news, and I think that's really the AI crux, is like, large language models just have all the large language models, but do they have all the data? Do they know how to consider it correctly? Do they have the experience, or are they positioned correctly with the right experience? And so, we really have taken that seriously. It's been very, very rewarding. And yeah, I mean, if you guys ever want to tune on in, you like to get a better idea of this, I can drop a link here. How many of you guys would like to use AI? Just send me in the chat. Yes, I'd like to use it. I'll send over a link to you if you'd like. Say yes, that sounds good, and I'll send it over. Cool. So BigBear.AI was the analysis today. We got to go do some really deep dives on it. Again, we're watching that $7 support. We'll be watching that throughout the day tomorrow. And Jonathan says, just want to say a piece of the AI boom. Got a really nice growth on BigBear.AI and SoundHound. That's awesome. Glad it's going well for you and making some money. Okay. Kevin says, do you buy Bitcoin ETFs? I do not personally. I used to, but now I just buy Bitcoin instead. Jzev, thank you. We'll start position in BTF if the price is right. Yeah, I mean, no pressure. I'm not telling you to start it. But I like the attitude. Price is right. Look for a good deal. Thomas says, yes, send the link. Okay, I'll send the link right here. There's a YouTube video. It's a full breakdown of the machine, everything that went into it, how to use it, and how we use it, how it's revolutionizing the analysis in the markets. And then in the link of the description, there is a link there in the description of that video I just sent in the live chat. And so if you go there, you can see the link, and that's for enrolling. It's beta. And we only have 100 spots on beta, and we've already filled a good portion of those 100 spots, because it's very much just for people that are looking to experience this beta and want to work with us to make it better, and also use the best AI tools in the world. And so it requires commitment. We're even adding something here that you can see, D-Wave and IonQ and Rigetti. We're actually adding quantum analysis into this, not analyzing the stocks of quantum, but actually using quantum technology to analyze stocks. It's a beta, and there's only 100 spots. If you want to be in it, it's white glove. We call you. It's, we have a training each week where we break down how to use it, all that stuff. So again, you can always jump in, and I just sent the link there. So feel free to, take a look there. Just sent the link in the chat. Awesome, guys. Appreciate you all. Shadow B says, BBAI, I believe in the stock. I love that. Cool. It's good. So we'll be trading again. We're in Bitfarm, so we're gonna watch that into tomorrow. If you guys would like to join us tomorrow morning at market open, when you join beta of the machine in that link I sent in the chat, you get a bonus for not just 1 year access to this software here with all the models, but you also get StockMate, which is our daily live trading sessions that we have every day at market open. So you can get that as a bonus when you go unlock this machine for 1 year in beta in that link. But if you So if you want it as a bonus, that's the place. If you just want to get the daily live trading, and also we have earnings coming out. So tomorrow we're watching like SoFi, PayPal, and then we also had a bunch of targets come out for all these companies here. And we have a whole community. We got live trading happening, tomorrow in about 11 hours from now. So, all that is happening. You got the targets for the week, some learning materials. There's some books in there as well that I've put together. In the community, we got about 28 millionaires inside of Stockmate. So if you ever want to network with like-minded individuals, they're there. And there's also there are some beginners as well. Primarily, people are pretty advanced. It's not like a what to buy thing. We're looking at, a lot of press releases, a lot of, a good conversation around what's moving. Okay. You see a lot of press releases with Lawrence. Thank you, Lawrence. Appreciate it. And then you also see some testimonials like David. He doubled his account since joining Stockmate. Thanks for dropping that in there, David. Appreciate you. And so again, like if you ever want to send me a message too, you can. It's in there. Second link in the description for Stockmates. We got a sale there. Current price is one-time payment, lifetime access, but we will at some point in the near term, we will have a subscription or higher lifetime access. There's a sale there though, and I believe it's still going for the data center boom if you want to grab it. Second link below. If I earned your thumbs up, guys, hit the like button. Do consider subscribing. I appreciate you all. Have a great rest of your night, and I'll see you in the next video. Take care.